Hello, my friends. So this is Moderna's stock chart for the last 5 days. All right. So here's my story. Uh, I bought Moderna on Friday, somewhere around here. As you can see, today it's still up. But what I was going to do was I was watching Moderna on Monday. It started moving up, right around here, and I was going to sell it around here, not knowing, of course, that it was going to go whoop. But yeah, because I mean, why not? It popped like 8-9% in one day after earnings, and after they had they got approved in Australia. There were a couple other things that motivated the movement of the stock. Anyway, I wasn't able to do that, and the reason I wasn't able to do that was because I was told by Fidelity that my funds had not yet settled because I had bought on Friday and it was now Monday. So apparently there's this rule for standard, investment accounts that you have to wait 3 days for the money to settle, um, which is really silly because I don't have a ton of money. This is a very small trade. This is $1,000. I had $2,000 that was lying in my account, not invested. So the money was there to cover the trade, right? Which didn't make any sense to me anyway because my account is telling me that I own Moderna stock, right? I own it. So why shouldn't I be able to sell it? It was giving me this warning saying that if I did so, I was going to be in violation of good faith and also penalized 8% or something like that. So that didn't seem very nice. Uh, so I called Fidelity just to make sure, what was going on there before I pressed the button for my stop loss order. Sure enough, the very nice lady at Fidelity told me that, what you have to do is you have to get a margin. You have to be approved for margin in order to do this. So basically, you need to set up the account as if it was going to be a day trading account. I told her, I said, and she said, Roth IRAs are not set up that way. I said, the whole point of me getting a Roth IRA was that I was going to take this money and invest it short term, right? So I was going to be able to pull the money in and out of stocks when the stocks would go up, and then I'd buy back, on pullbacks, and I would sell when it would go up. And I could do that at a relatively rapid pace, not day trading necessarily, but if something pops 10% a day, yeah, I'm going to sell it, right? And she was like, yeah, that sounds like a great trading strategy. I said, the reason I put it in a Roth IRA was so I could avoid capital gains taxes, right? Because I'm not pulling the money out of the account. I'm just taking it off the table within the account. So none of those gains are going to be taxed as I go. If I have a regular brokerage account, I'll be taxed, right? You guys follow me? If you don't, put it in the comments below. I'll try to explain it a little bit better. But the tax shelter idea of trading in a Roth IRA, this is not going to be an investment account. It's going to be a trading account. So she said, well, that's okay. We can apply for, see if you qualify for a margin account. Well, that doesn't, Fidelity's Roth IRAs do not qualify for full margin account. They do have something that says limited margin account. So we're going to investigate that. So she's following through the menus with me, and I look at limited margin account. Well, it turns out you have to have at least $25,000 in a limited margin account. Since I just opened this IRA, it only has $7,000 in it. So I guess I got to do some trading in order to get up to $25,000. Or, if you have an IRA, you could roll over a partial rollover and put those funds into this IRA. Here's the thing. The thing is, my trading strategy is a sound idea, I think. Trading inside a tax sheltered account to avoid capital gains. Since I'm not planning on removing these funds until at least I'm 59 and a half. So I won't get hit with with any taxes, right? Because it's already tax money I'm putting in my Roth. You guys get that? Okay. So, if I'm in a regular brokerage account, every time I take a profit, I'm going to be taxed on it. And I don't want that to happen. So this changes my strategy now. Now I have to pick stocks which I think are going to be good over the next 3 days instead of trying to get them bouncing off of a bottom. See, Moderna had gone down from the previous day like 5%. That's why I picked it up. But then it shot up. It ended up shooting up almost 20%. But I couldn't sell it here because I had to wait for it to clear, and now it's down another 6% today. So basically, the fact that I don't have that margin approval for this account just cost me 6%. Now, I'm fine with owning Moderna long because I just, I wanted to be part of this company. This company's like dynamic. It's awesome. I know it's already had a great run, but I thought I could catch some profit at the top. Anyway, if you guys follow what I'm saying here, put it in the comments below. If you see any holes in my strategy, put that in the comments below. Let me know what you guys are thinking. I appreciate the feedback. I'm thinking this is a good strategy, but you guys can tell me because I'm sure there are people out there with much more experience than I have doing this sort of thing. But let's have a great day together. Let's all learn together, and see if you can do something nice today for somebody without getting caught. Thanks for watching. Appreciate it.